Okay. I'd like to introduce Shannon Doyle, and she is one of our great partners with Lutheran Social Services. And I'll just hand it over to you and let you get going, Shannon.
Thank you, Jill. I think I answered you, but you probably didn't hear me
I
because I
did.
just realized I was on mute. So it always helps to unmute yourself. So thank you so much, Jill. I'm always excited to be here with everybody. I have a few tasks in front of me tonight, but Jill, I made you co-host. So if you can help me monitor the people entering the meeting, if people show up late, that would be great. But yeah, so tonight we are talking about student loan repayment. So a lot of times when you are trying to pay off student loans, it really can feel like you're training for a boxing match, because sometimes you feel like you're out there, you're making the hits, you're making your payments, and you're winning that game, right? But then all of a sudden something could set you back, and there's so many different programs, there's so many different payment plans. Different ways to get your loans forgiven, and pros and cons with federal student loan programs. So we're going to talk about a lot of that. But just once again, just so you know, my name is Shannon Doyle. I am a program manager with LSS Financial Counseling. And if you are interested in scheduling an appointment with LSS, you can call this number 800-528-2926 and let them know that you are a member of Mid-Minnesota Credit Union. And this is a little bit about just a little bit more about our partnership with Mid-Minnesota. Just so you know, LSS Financial Counseling is trusted and non-judgmental, and we've been providing services for over 30 years, so we got lots of experience behind us. Because you're a member of Mid-Minnesota, get up to 6 free sessions one-on-one for yourself or your immediate family. Now, those sessions right now are by phone, or virtual or online. And until further notice, we're not quite back in the swing of meeting in person with people yet, but we do offer access to a financial counselor on call every day, or Monday through Friday, I should say. And we have tons of online resources, including our blog, Sense and Sensibility. That's Sense as in CNTSIBILITY. That's a lot of spelling. And then we also offer services in English, Spanish, and Hmong. So lots of different ways that you can connect with us. And so I hope that if you do have further questions or specific questions about your personal situation tonight, if you have more questions after tonight, I should say, I do hope that you will reach out to one of our counselors, because we have a great team of very highly educated in student loans. We have a team of student loan repayment counselors who are very knowledgeable about helping you make plans to repay your student loans. All right. So if you have been on one of our webinars before, you will be familiar with the idea that we work very hard to make things interactive for all of you. So we use a program called Menti.com, and Menti allows you to enter questions, comments, and anonymously and confidentially. Also, though, then through Menti, we use polls and quizzes and things like that to kind of help you learn more and feel engaged with the workshop, because I know that it's really can be difficult, especially when it's so gorgeous a night as it is tonight. It can be really difficult to sit and listen to just one person talk for an hour. But when we have a group of people on a call, it's also difficult to have people ask questions directly as well. And there's also the piece that sometimes when we're talking about money, especially debt, we can feel like embarrassed or ashamed or shy about asking our questions. And so the nice thing about Menti is that when you do enter a question through Menti, you are asking it, once again, anonymously, and you don't have to give them any of like your email or anything like that. So here's how you would get to the voting if you would like to participate, please, I hope you will participate. I put a link in the chat, and it's right below the link. And that link, that the first link in the chat, is for a form to fill out if you would like to get follow-up information, like a copy of the PDF or something like that. And I will be including a evaluation of the workshop as well. And I always appreciate your feedback. We'd like to know, how valuable these workshops are. But right now, if you want to go to take out your phone, if you're hopefully you're not on your phone already. If you are, this may be difficult for you to do. But take out your phone or a tablet, another device, maybe a laptop. If you're on a laptop, you can pull up a second browser, go to menti.com, and then enter this code 47891179. Now, once you get there, I'll give you just 30 seconds more to get there. You can also use this QR code if you want. And once you get there, I want you to look at the bottom of, or look at your screen for these three little dots. Look for this icon right here and click on it. And click on one of the reactions so that I know that you have found it, because this reaction is a great way just to kind of, there, perfect. I love it. Thank you. This lets me know that, first of all, I just want you to know where to find it, but you can feel free to enter comments at any time during the workshop. But if you have more of a question, there's also a question icon where you're going to see more like a cartoon like speech bubble, and that's where you can enter a question. All right, so it looks like at least a few of you are at menti.com. So we are going to start off with a question for you. And if you're not able to go to menti.com, feel free to put your questions in the chat function here through Zoom. But you can also throw them up here in the chat on Menti. I'll just give you a few minutes to type those in. Sometimes it can take a bit. Maybe we don't have any main questions or concerns with student loans tonight, and that's okay too. Oh, where do you locate graduate program loans? Wow. So this workshop is focused on paying off loans, loan repayment. So I don't have a lot of good sources for graduate program loans. The only thing I can really recommend for people to do is always fill out the FAFSA form. Because that's the only way to get to federal student loans for graduate programs. As far as looking for any other loans, you would be looking for private loans, which then you would be going through your bank or larger places like Chase or Bank of America, other places that, unfortunately, I don't even have a list of places that offer the private student loans. So I'm just kind of pulling out ideas about where you could look for those.
You know that you'll always pay less if you go through FAFSA, so we offer private
Absolutely.
student loans at Mid-Minnesota. It's through a separate company. And the first thing we're going to ask you, have you filled out your FAFSA? Because
Okay.
those are the cheapest ones. We want you
Yep.
to do the best things. Those are the cheapest ones that you can get. I have a graduate degree and got everything through my school and through FAFSA for that. So we
Absolutely.
always
Yes.
recommend you go through FAFSA first,
Mhm.
because it's going to be the best value for you.
Yeah, absolutely. And I agree 100%, Jill. Thank you yeah, absolutely. Because the interest rates are the lowest, the terms are spelled out, they're regulated, they're a really good deal as far as that goes. So let's see what other questions we have. With all the COVID relief, what options are currently out there for student loans? Great, we're going to talk about that. So hopefully we'll get you answers to that. If you have self loans and federal loans in place, do they have to stay separate, not consolidated? Yeah, I'm just going to go ahead and answer that question right there. Yes, self loans are state loans, so they're technically a private loan, except they're funded through the state of Minnesota. So if you you cannot consolidate a self loan and change it into a federal loan. And we do not recommend ever changing a federal loan into a private student loan, which is what you would have to do if you were to consolidate, or actually in that case it's called refinance, because you are turning it from a federal loan to a private student loan, and we really discourage people from trying to do that. So yeah, if you need to look at more specific solutions for your situation with the self loans, I highly recommend meeting with one of our counselors for sure. um, Is it possible to renegotiate repayment options, especially for those who don't qualify for loan forgiveness? Are there other avenues for loan forgiveness? We're going to talk about that. So great. We're hopefully answer those questions. And if we don't by the end of our time together, please let me know and we'll come back to it. And then somebody's asking about Sallie Mae loans. Can we consolidate them? So that's the trick with Sallie Mae. Sallie Mae used to mean that they were federal. Now Sallie Mae loans are private student loans. Although there's some older Sallie Mae loans kind of hanging around that might still be federal student loans. So that got really complicated when Sallie Mae separated, got divorced from the government, so to speak. No, they became a private company, and that's why then they have their servicing arm, which is Navient. So Navient services federal loans, but they also service the Sallie Mae private loans. So that can be a little tricky and confusing. So it really depends. Once again, the rule of thumb with that is you cannot consolidate private loans into federal loans, and you absolutely don't want to consolidate federal loans into private loans because the interest is going to be higher and they will cost you a lot more money, and there's not as good of terms. So let's see what other questions we have. Will my current loan servicer sell your loan? They might. Yes, your loans can get transferred. They're doing that less and less these days, but yes, they can do that. And also the servicers, they're contracted with the government. So those contracts can come up, they can end, they cannot be renewed. So it's possible that you could end up with a new servicer in the future. And what is the best plan to pay off debt? I'm assuming you mean the student loan debt. So we will also talk about those strategies. Great, this is awesome. What's the scoop on federal loan forgiveness if you work in public education for a certain number of years? I work in a private school. Those years don't count, do they? Well, if your private school is a nonprofit, then yeah, that's still going to count. That is absolutely still going to count for you. And we're going to talk about that too. So you guys have some great questions. I got another question about, is there any truth that President Biden will eliminate student debt? That's yet to be seen. There's a lot of talk about it. And it's possible. It sounds to me like it's the hold up now is about them talking about the way to do it and how much will be forgiven. Um, there's a lot of people, a lot of advocates out there who believe that the president can unilaterally decide how much debt to forgive. There's some code in the law that says that he could be able to do that. It sounds to me like President Biden would prefer to have Congress pass some sort of law having to do with that. So really, it's yet to be seen what's going to happen as far as forgiving debts that are already out there, at least through programs that are, through any sort of just, one fell swoop forgiveness, to put it that way. So now I just want you to take a minute here to rate yourself on the following statements, and really try to do it as quickly as you can here. Um, so the statements are: I know how much I owe in student loans. I know the difference between the types of federal student loans, and I know which of my loans are private student loans versus federal student loans. Just kind of want to get a feel here of where y'all are at with this. Okay, we've got a couple answers coming in here. Okay, so that's good. So of the people who answered, it looks like you're pretty knowledgeable about what you owe and who you owe it to and what types of loans you have. So that's good because that's really the first step towards any strategy of paying off student loans. And here we go. It's really important to know. And why is it important to know? Well, it's important to know because, first of all of these loans, direct loans, these loans are highly regulated and subsidized. And what I mean by subsidized is through lower interest rates. Um, so they're highly regulated through Congress and through the Department of Education. So we know exactly what can and can't be done with federal student loans. Okay. Now, the most common federal student loan, especially if you started school 2009 or later, is you're more than likely again. Well, you absolutely have either a direct federal loan that's subsidized or unsubsidized. Now, the difference between those two types of loans is that subsidized loans can only be taken out by undergrad students, but also when you are in school or any type of deferment with your loans, the federal government is paying the interest for you. So when you take out a federal student loan and that loan is dispersed to you, whether it's subsidized or unsubsidized, they immediately start accruing interest. This is why when a lot of people go into repayment, they owe more than they thought they did because their unsubsidized loans had been accruing interest since the day they'd been taken out. So that's 4 years of unpaid interest for your earliest loans. But the subsidized loans, even though they were accruing interest, the federal government pays that interest for you until those loans go into repayment. So that's just an important distinction to know because the subsidized loans, in that sense, are always going to be cost you less to borrow than unsubsidized loans. Um, and then we have other loans for graduate students. So we have direct federal loans, which can be unsubsidized. You can take those out as a grad student. But then we also have direct grad plus loans, and we have direct parent plus loans. So parent plus loans are loans that parents take out to pay for their undergraduate students' education, right? If there's a gap between the amount of financial aid and the cost of tuition and room and board and all of that. Okay, so direct parent plus loans, unfortunately, are the most expensive federal loans to take out, but they're still typically a better deal than any private student loan. And part of that is due to, yes, the lower interest rates, but also another part of that is because private student loans and alternative loans, which mainly what we mean by that are parent taking out a home equity line of credit or a home equity loan to pay college costs. It could be a family loan. It could be the state loans, like self loan. But private student loans, they're kind of the wild, wild west of of student loans because of the fact that they're not regulated and the terms can be all over the place. Now that's not to say that they're bad or that they're wrong or anything like that, but it's just like any other loan product. You have to be careful and just really savvy about what the terms of that loan are when you take it out. So it's really important with a private student loan to pay attention to the details because those details are going to guide the loan throughout the time that you have it. And unlike federal student loans, private student loans really don't have options. You may be able to get a forbearance for like right now during during the past year. Private student lenders have been offering some form of forbearance, but they don't stop the interest. They're not going to stop the interest, at all, because these are, banks and other, credit card company. Well, what I mean by that is Discover or, Chase or places like that, who are, so it's banks or credit unions or larger companies that are lending to people, and they just don't stop the interest like the federal government does. They just, they can't do that. It's not in their budget. Now, these other loans here, FFEL loans and Perkins loans, these are federal student loans that they used to make. Okay. And this is where it gets a little confusing, because if you're as old as I am, you probably took out these loans. They are loans where the government backed the loans, they guaranteed the loan, but you actually borrowed money from a bank like Wells Fargo or Chase or a credit union. I don't know, Jill, I don't know how many credit unions participated in the federal student loan program, but I'm guessing it could have been some uh,
Yeah, I
credit
don't know
unions
necessarily the answer
participated.
to that.
Yeah, yeah. It's hard to know. I mean, it's history, it's past, but so these are all the different types of loans. All right. Now today we're focusing on federal loans because those are the loans that we know that we are able to say, well, there's this option, that option, the other option. When it comes to private student loans or alternative loans, the options just are going to be different based on who your lender is. So, an option for a self private loan is going to be different than a Wells Fargo private loan than a Sally Mae private loan. So, they're all different. Okay. So unfortunately, we're not able to lay out the parameters in the same, or the options in the same way as we can with federal student loans. Um, but I'll do my best to answer questions that you might have, generally speaking, over private student loans as well. So the good news is, and somebody asked about this, is that yes, all federal student loans right now are frozen through September 30th of this year. And not only are the payments frozen, but the interest is at zero. So those loans are just sitting there not doing anything, right? They are not accruing interest. They're just, you're not required to make a payment. You are actually just, they're just sitting there, and that is great. It's a wonderful reprieve for many people. So I do get the question a lot as well: if I can afford my student loan payment, should I still be making it? And as with most things with personal finance, the it's the emphasis is on the word personal. The answer there is it depends. But one thing I always say to do is to think about things in this order. Since your loan is frozen and there's 0% interest, or it's the payment is frozen and there's 0% interest. Think of things in this way: if you have a minimum amount of savings, like things that can things savings that can cover emergencies that might pop up, like just that minimal savings, like $500 to $1,000. If you don't have that in place, try to get that in place. Give yourself a base amount of just a little emergency cushion, so that if things like car repairs or medical bills, or other surprise vet bills, home repairs, if those pop up, at least you have a little cushion set aside to cover that. um, if you already have that taken care of and you have credit card debt, then focus on the credit card debt. Use those payments to pay down your credit card debt. Because when you pay down credit card debt, of course, I mean, first of all, it helps improve your credit, number one. Number two, interest rates on credit cards are so high typically, that if you can make progress on those while your student loans are on pause, that is a really good use of your money. And you think of it this way: if you have a $3,000 credit card balance and your interest is 15%, and you can get the bulk of that $3,000 paid down before your student loans go back into payment, um, you have a guaranteed 15% return on your dollar because that's interest that you don't have to pay, right? So you're saving yourself money by paying down that debt. So it's a really good deal. If you don't have credit card debt and you have that minimal amount in savings, then you can focus. Then I always recommend focus your regular student loan payment onto a private student loan. Okay, if you have one, focus it on the private student loan. All right. And finally, if you don't have any of those other three things, or if you don't need that money in savings, or and you don't have credit cards and you don't have private student loans, then absolutely pay down your federal student loan. And pay it down, just, unless you are going for public service loan forgiveness. That's a caveat, but I'm going to talk more about that in a little bit. Looks like we have a question here. What about always moving your student private credit card debt to a 0% offer? I'm not sure exactly what you mean about student private credit card debt, but if it's just credit card debt, that's kind of a strategy for how to pay off credit cards. And if I have time at the end today, I'll talk about that. But yeah, I'm sorry, I'm not really sure exactly what that question is. Maybe you could clarify for me. Okay. Now a
You
lot
want
of
to
you
send that to
said,
me in the chat, send it right to Jill Casper, and I could ask it for the group.
yeah, there you go. That's great. Oh, she says used credit card just to pay student costs. Yeah, why don't you email directly to Jill Casper, and then because then she can type back and try to answer that for you and get it clarified. That would be wonderful. Thank you. Um, all right. So now most of you said that you know where your student loans are, you know who you owe and all that kind of stuff. So we're not going to spend much time here, but just if you don't know, a couple really great places, or if you feel like you need to double check, you can go to studentaid.gov and figure out what you owe there, because only your federal student loans are going to be listed. And then you can review your credit report at annualcreditreport.com, and that will show you any other loans that weren't at studentaid.gov are going to be private student loans. So that's a really good way to figure out which types of loans you have. I just want to familiarize you a little bit with the federal student aid website. Once your loans are, going into repayment, wherever you are, it's great here because you can kind of click on where you're at. So if you're about to graduate or leave college, you can do exit counseling. You can even set up a way to start making loan payments. But if you are graduated from undergrad and you're going into your grace period, you have until December before you're going to have to pay on your student loans, because your grace period is 6 months. So you don't really need to worry about making those payments yet. But you can also update your contact information here too if you need to do that. Now, if you just graduated or left school, you're in a grace period, you're preparing to repay your loan, you can find out who your loan servicer is, you can learn more about grace periods, estimate your payments, you can even choose your payment plan if you want. Or you could start making loan payments, but give yourself a break because there's a pause right now. It's 0% interest. It's not going to hurt you to not start paying your loans yet. And then lots of different options if you've been in repayment and you're not sure, like if you need to look at a different repayment plan or something like that. Lots of different options here too. Um, and for every question, well, most questions that you have about the COVID-19 emergency relief, you can learn. They have a fantastic FAQ section at this website. So I highly, highly, highly recommend that you make good use of federal student aid. At studentaid.gov is the website. All right, one more quick. I got another little rating here for you all. So please rate yourself on the following statements. looks like we got about 30 more seconds here. Yeah, so this one's a little different because, it can create a lot of anxiety about being able to afford your student loan payments. And a lot of us are really confused about payment plans and what kind of payment plan am I in? And of course, with income driven repayment plan, which is IDR, there is an annual recertification. Um, so it's kind of good to know about when you're going to need to do that. Okay, so let's talk about this. So there are three different student loan payment types that are focused on paying both your principal and your interest. So allowing you to pay down your student loan in a certain amount of time. Okay, so these are time-based repayments. The standard repayment that anybody is put into once they graduate from an undergraduate or graduate program is a 10-year repayment plan. Okay, so that is a payment that's going to pay your principal and interest on a monthly basis, that in an amount that is going to get you out of debt in 10 years. So get those student loans paid off in 10 years. A graduated repayment plan starts off lower. Usually it's an interest only payment. And then every couple of years, it steps up a little more. So your payment gets a little bigger over time. And then at the very end of your loan, it's really big, because you're kind of making up for all the interest that you didn't pay earlier in the loan. And so that's one that a lot of people try before they go into something like an income driven repayment or plan or something like that. Extended repayment is for people who owe over $35,000 in federal student loans. If they want to extend that repayment plan to 25 years, they can. Now, so all of these are time-based repayment plans. And if you have an amount of federal student loans that's higher than $50,000 and you end up consolidating those together, you're going to end up with a repayment plan that could go out to 30 years. So just be really careful about how long that repayment term is. Because of course, the longer you take to pay off your student loan debt, the more you're going to pay back, right? And that's just the way it goes with any kind of debt. But so it's really good to think of these as just your time-based typical loan payments, right? This one's going to stay the same the whole time. The graduated repayment is going to change every couple of years, and the extended repayment plan is going to stay the same for 25 years. Okay. All right, so then you have your income driven repayment plans. Now these are not based on time at all, well, except for the forgiveness component. Okay, income driven repayment plans are based on your discretionary income. They require an annual recertification, but they do qualify you for public service loan forgiveness and or a time-based loan forgiveness, which would be 20 or 25 years of payments. Okay, so it's important to understand how they figure out these repayment plans. So let's say that we have a family of four with a $52,000 in adjusted gross income. So that's their income after all their deductions are taken, all right, from their gross. And it's family of four, so we have 150% of the poverty level, which is 39,300. So they subtract that from the adjusted gross income. So this payment is going to be based on $12,700 of income. So then what they do is they take that discretionary income, they divide it by 12 months, which equals 1,058, and then they multiply that by the percentage that the payment plan is going to be. So some payment plans are 10% of your discretionary income. Other payment plans are 15%, and there's another payment plan that's 20% of your discretionary income. Okay, so In this example, we're using a 10% payment plan. And so that means that this person's monthly payment is going to be $105.80. And it's going to be that whether they owe $100,000 in student loan debt or whether they owe, $10, $15, $20,000 in student loan debt. So it's not based on how much debt you have at all. It's not based on anything but your income and your family size. And of course then your discretionary income in the end. Now there are other qualifications and eligibility criteria for each of the different income driven repayment plans. And for anybody who signs up for the follow-up information, again, that link is at the top of the chat. I will send out a chart that shows you different things like if you're married, whose income is included? How do they handle the interest payments? How long will it take me? How many years do I have to pay before this debt is forgiven? Okay, but the most important thing to remember about an income-driven repayment plan um, is that it is the only time in your life, it's the only type of debt out there where the government actually sanctions a negatively amortizing loan. And so what does that mean? It means um, that you it means your loan's getting bigger over time. It means that even though you're making payments every month, you're probably not even covering the interest, so that debt's going to get bigger over time in an income driven repayment plan. um, so there are plus and minuses to income driven repayment plans, and that is the minus. The negative amortization is a big one, because if you think about it, after 20 or 25 years, that's going to be a pretty big balance depending on how much you earn in your lifetime, but it could be a fairly big balance that is forgiven over time. And except for the exclusion is until 2025. So if you hit that before 2025, though they're not charging interest, or I'm sorry, you're not liable for taxes on that. But the but otherwise, generally speaking, right now, it's very possible that you could end up paying taxes on that forgiven debt. Hopefully, Congress will permanently fix that, but it's not permanently fixed yet. So let me just double check. We have a couple questions here. Oh, Tammy, did you get the answer to your question? How is the family size based for an undergrad who still lives at home but is an adult? They only your family size is only the people that you support. So it would just be you. That would be your family size. And then Sasha says, sounds like an emergency only payment plan. Yeah, I would say so. I would say that it is. And remember, just because, so if you are in an income driven repayment plan, though, that may last for 20 to 25 years, but you can pay extra. There's only one time. So if your income goes up and the payment is still pretty low, but you want to pay extra, go ahead and pay extra, because that's going to help you in the long run. So definitely. But if you have more questions like that, like in-depth questions about that, I really highly recommend, once again, meeting with one of our counselors, because they can help you kind of figure out what plan is the best for you. But what if you hit a point? What if September comes and you get this notice from your servicer, or what if your loans go into repayment because you just graduated from school, and you get a notice and you're like, oh my gosh, I cannot afford these payments. Well, the very first thing that you do want to look at is an income-driven repayment plan if you can't afford your payments. So look at an income-driven repayment plan. The second thing you might want to look at is a deferment. And a deferment, you can get a deferment if you are unemployed. You can get a deferment if you are in an economic hardship. You can get a deferment if you are deployed in the military, or if you're going straight into grad school from undergrad, or if you're going back to school, whatever it may be, as long as you're part time, you could get a deferment. There are some other reasons why you could get deferments, but those are the main types of deferment. And then a forbearance is really just something that the servicers do. It's kind of at their will. And like if you're just struggling but you don't qualify for a deferment, you can always ask for your loans to be put in forbearance. But with a forbearance, you have to remember that, or you need to understand that both your subsidized and your unsubsidized loans will accrue interest. So they will get bigger while you are in a forbearance. So, that interest is always something to think about, because that is how much that loan is costing you over time, right? Um, but the most important thing is, if you can't make your payments on a federal, especially a federal student loan, well, with any student loan, you need to call the servicer, you need to call the lender right away and talk to them, because the last thing you want to do is default, especially on a federal student loan. And default means that you haven't, with federal student loans, it takes 270 days. So basically 9 months of non-payment before those loans will default. And what default means is that they basically say, well, you didn't make your payments, so now you owe the whole thing. um, and the government has very strong powers for collecting those defaulted federal student loans. They can recapture tax refunds. They can place administrative wage garnishments on people's wages, and they can also recapture Social Security, which is, really an eye opener to a lot of people. They don't go away. They don't go away. So you definitely want to take care of them.
We tell people all
Yeah.
the time at the credit union, and this goes for all loans. If
Mhm.
you're struggling, contact your financial institution. Like,
Always.
we
Always.
don't want your car, we don't want your house, we don't want it. We're not mortgage
Mhm.
people, we're not car people. We want to
Right.
help you through it.
Yeah.
And you're better off contacting any lender. And this is really in general beforehand, saying
Yep.
like, I'm struggling, what can we do? We would rather work with you than have to collect from you.
Yeah.
And I can't stress enough, student loans will never go away. And so that's
They
really
really
the
don't.
one thing, like, you can't go, they don't count in bankruptcy. They don't count on anything. So that's why I believe this class is so important.
Yeah. Yeah, it's really super important to understand the student loans and all the options. Absolutely. Okay, so it doesn't look like there's any questions right now. So let's talk a little bit about forgiveness. Let's look at a light at the end of the tunnel, maybe. Uh, or at least, getting things paid off. Now, there are different categories of loan forgiveness. Okay, and so the most well known, the biggest one that's always being talked about is the public service loan forgiveness, or the forgiveness that happens through just making that 20 to 25 years of income driven repayments. So those are your time based forgiveness options. Um, you know, uh, the public service loan forgiveness, we're going to get into that in depth in a little bit. But like I said, with income driven repayment plans, um, there's definitely plus and minuses to it. But the biggest thing you need to keep in mind is that as of right now, not that this won't change in the future, but as of right now, if you reach that 20 to 25 years, the amount of debt that's forgiven it may be counted as taxable income, and so you might have a tax bill from that. So it's just something to think about and to plan for long term. Surprises, you never want surprises with your money, especially with taxes. Right? I mean, the only kind of money surprise you want is like, oh, I had a long lost uncle that left me $1 million. Awesome, that's very cool. Thank you, uncle. That's a good kind of money surprise. There's really not any other kind of good money surprise out there. So, um, So just bear that in mind. There's also occupation-based forgiveness plans. And, again, it's public service loan forgiveness, but there's also teacher loan forgiveness. And, we all hear about the problems with these programs. But, they're tricky, and you have to understand how to fill out the paperwork, what the requirements are, and all of that. So it's really important to understand how to qualify for those programs before you try to go for them. Um, and then the school-based loan forgiveness is basically what you hear about when schools like Corinthian College or ICC or those other for-profit schools that have closed and they defrauded students. There's also, if your school closes while you're in school, you may be able to get forgiveness. And then there's the borrower defense, though. That's the big one that we're hearing about these days. And of course, there are event-based options for forgiveness, one of them being total and permanent disability. The federal government will discharge your debt if you become totally and permanently disabled. But once again, it's a long 3-year process to get through. So you need to make sure that you understand all the ins and outs with it. And then here's the good news: the government will discharge your student loans upon your death. So at least that debt is not going to follow you or your family past your lifetime. And then bankruptcy is an option you can look at. However, it's very rare and very expensive to be able to file bankruptcy with any sort of private or federal student loan. Um, Judges are starting to become a little more lenient with it, but it's very, very difficult to do. Um, yeah, the forgiveness programs can be canceled by future, not by administrations, though. They have to be canceled by Congress. So this is not like an administration to administration thing. These forgiveness options are part of the education law. And so Congress would have to repeal these and change them for them to go away. So I kind of take comfort in that because, I mean, we've all seen how productive Congress is from time to time. Not trying to be political, but they're not often very productive. So the Education Act has been up for to be renewed for several years now, and they haven't made any movement on it. So I wouldn't worry about them going away anytime soon. So let's talk about public service loan forgiveness. There's a lot of misinterpretation about this out there. Public service loan forgiveness is forgiveness of your remaining balance after you have made 120 qualifying payments. A lot of people think it's, oh, I worked for a nonprofit for 10 years, so I should get forgiveness. That's not it. It's any remaining balance after you made 120 qualifying payments. And you also, so what is a qualifying in payment? Well, you have to work for a qualifying employer, you have to have qualifying loans, and you have to be in a qualifying payment plan. So qualifying loans are direct loans of any type, the Grad Plus, the Parent Plus, the direct federal loans. Those are all qualifying loans. Private loans, FFEA loans, and Perkins loans don't qualify. Qualifying payments essentially are income-driven repayment plans. Qualifying employers are government agencies, school districts, government agencies at any level, 501c3 nonprofits, and some other nonprofit organizations as well. You do have to be working full-time. However, if you work for 2 qualifying employers at the same time that, and your hours average 30 hours a week, you can still qualify. So you just have to get both your employers to certify your employment. And don't forget that once you apply for forgiveness, you also have to be working for a nonprofit at the time that you apply and at the time that forgiveness is granted. So there's a lot of qualifications to understand there. So the key here is to know the program. inside and out. And the best place to start looking into that program is by going once again to studentaid.gov and use their public service loan forgiveness help tool. And that will help you get there. There's a form that you should be filling out every year and having your employer sign, and that provides you proof, or that provides the it's kind of like the notice to your servicer that you are going for public service loan forgiveness, so they should count your payments. And so for those of you who think that public service loan forgiveness doesn't really happen, this is a real person who had their loans forgiven, and you can see after 120 payments, they owed quite a bit because that interest accrued and accrued and accrued. However, their loans were forgiven. And when you get forgiven for public service loan forgiveness, that is not taxable income. So while we don't hear of it happening very often, if you know all the rules and you can follow follow those, follow the steps, make sure you have the qualifying loans, qualifying payments, and qualifying employer, the three big qualifies, and turn in your annual certification form that you can find at the PSLF help tool. That's going to move you on your way quickly. And if you have more questions about that, once again, meet with an LSS financial counselor because they can help you. All right, we're going back to Menti. We're going to do a quick quiz here, and then we're going to be done. We're going to wrap it up. So let's look here. We have got I'm just going to give you 30 seconds to answer these. But let's look at so you receive a letter stating your loan servicer has changed. What do? Is it safe, but you verify? Is it a scam, or do you ignore it, or are you not sure? Oops, I think I gave you, I think I added 30 seconds. I don't think I meant to do that. Sorry about that. All right. So you receive a letter stating your loan servicer has changed. Is it a scam or not? All right. So it looks like everybody who's voted here who's gonna voted has, oh, nope, we still got a couple coming in. Okay. Okay. All right. So the correct answer is it's safe, but verify, right? I mean, just because your servicer will change from time to time. You just want to verify that that's the case. All right. All right. Next question. All right, we got 30 seconds. You are promised immediate and total loan forgiveness or cancellation. Act now. Is it safe but verify? Is it a scam? Ignore it. Or are you not sure? All right, you guys are smart. You got it. You got it. Yes, it is a scam. Ignore it. All right. You are asked to sign a third-party authorization and or provide your username and password. Is it safe but verify, scam, ignore it, or are you not sure? All right. All right, you are exactly right. A scam. Ignore it. All right. So that gives you the idea. It might be a scam if they require upfront payment or monthly fees, probably a scam. You can do everything for free. If they promise immediate and total loan forgiveness or cancellation, that is a scam. That's not happening. There's no immediate and total loan forgiveness. Just doesn't happen. They ask for your username or password. No, that's illegal. That is illegal. Don't give anyone else your username and password. If they ask you to sign and submit a third-party authorization, don't give anyone your power of attorney. That's only for if you're on your deathbed, okay? Or if you're incapacitated in some way. Don't ever hand over your power of attorney to somebody you don't know. Ever, ever, ever. They claim their offer is limited, encourage you to act immediately, right? I mean, they really give you that strong sell, right? And then of course, if the communications contain spelling or grammatical errors, that is a dead giveaway right there, that's a scam. So be careful because there are lots of scams around student loans and helping you get them paid off and loan forgiveness. So let's just wrap this all up. I know we've talked about a lot. And once again, I just want to remind you that if you do want a copy of the PDF and other supportive information, go to the top of the chat and click the forms.office.com link. And that will bring you to a form where I will then send you out the evaluation and all the supporting material for this workshop. But let's just sum it up. First of all, you got to know what you owe, file and organize all paperwork, and keep that paperwork until your loans are paid off or forgiven. Um, Take action immediately if you can't pay, whether it's a federal or a private loan, no matter what it is. Talk to the lender or servicer, find out what options you have. Determine the best payment plan for your goals and budget, right? Because they're all different. They all have pros and cons. Certify annually for public service loan forgiveness and income driven repayment. And then don't pay anyone to do for you what you can do yourself for free. And, finally, I should really add one more on there. Don't forget about LSS, because we really, truly, our counselors are there to help. We look at your full financial picture and help you to make a plan, not just for your student loans, but to reach whatever else your financial goals are. All right. So, with that, let's take a minute to see if we have any more questions. I don't see any in Menti, but we'll give you a couple minutes. You can also throw them in chat. I love the heart eyes. Thank you. All
And,
right.
the information is there. And I want to say, as Mid-Minnesota, the reason that we partner with Lutheran Social Services is because they're not for profit. And so they're not profiting off of you. So when she said, you shouldn't pay for things, we have a great partnership with them because they're not charging you and doing all those things. So that's part of that. And going back to what Shannon said about the scams, that goes for anything. If you did not initiate that conversation, if it's too good to be true, it's a scam. It's a scam.
True.
I can't say it
It's
enough. We see it every day. And if you want to go back,
the
and
worst.
Shannon's done quite a few seminars for us. They're on the MMFCU website, mmfcu.org/events. All of these sessions are recorded. So you're welcome to go back
Oops.
and rewatch them and take notes on them. And so please feel free to reach out to Shannon or anybody at LSS, or come into your local MFCU office. If we can't help you, we'll hook you up with LSS and they'll help you out.
Absolutely. Awesome. Fantastic. So it doesn't look like we have any other questions here today. So I just want to say once again, thank you all so much for being here tonight. And we've got another workshop coming up in August. If you've got teenagers in your life, or if you are a teenager, um, uh, join us for Teach Your Teens Money Moxie. Otherwise, that's the end of our workshop. So thanks everybody for being here.
Thanks, everyone.